Let's look at Kura Oncology. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we go here to the Megatrends. So Precision Oncology, it is performing pretty well vis-a-vis the S&P 500, massive outperformance, but we have seen a pretty substantial pullback in many of these companies. So when we go here to Kura Oncology, they are only 5% here from the low and has been through a minus 63% pullback. That's obviously a pretty substantial correction. So Kura Oncology, your genetic code is unique. Your cancer treatment should be too. This is one of the super important developments in medicine, where the treatment is surgically designed for your genetic makeup. So this is super important. This is the future of medicine. So let's jump into the charts. So this is the big picture. We do have something that is a bit time cycle-ish. The time cycles have differed a bit over time. You see that approximately something like this fits most of the data: rise, decline, rise, decline, rise, decline. So the suggestion here, based on the time cycle, is that the pullback phase is supposed to be over soon. When we look here at the seasonality of Kura, we do see that September only closes higher 50% of the time, but the average performance is a whopping 29% over the last 7 years. We do see that it is one of the strongest months. August is also okay, 50-50. October is very weak though, but September has some really good seasonality, especially when it comes to the average performance. It only closes higher 60% of the time. But yeah, we are towards, the later part of August now. We do have a rising time cycle that hasn't manifested itself yet. This is very interesting, I must say. When we look here at the weekly RSI, we are at a very low level that tend to trigger rallies. Here it formed a low, big gain. So let's actually measure that move. From that low to this high was over 100%. Yeah, so the bears are still in control, to be clear, but it's time to ask whether the bears have sort of already had that big move. It makes a lot of sense to turn bearish around here, but here you are late to the party. This is a dangerous place to start shorting big. Going here to the daily data points, we could argue that we do have some horizontal support levels here. That is definitively interesting. Also back here as well. So this is a very key level. So the primary expectation here is that the bulls will show up. The RSI is also at a level that has formed lows multiple times in the past. Here it formed that nice low. Here we did go deeper, but we did get a big rally. The PPO is also at a level that is, there have been times where we have been further away from the red 200-day moving average, but more often than not, this extreme pessimism tends to form lows for Kura Oncology. So the chart here is speculatively bullish. Here is Finviz. We have the trend line, which has been some pretty good resistance. When we look here at the analyst price targets, and if we focus on the one from 2021, the current year, that is a $42 price target here from Credit Suisse. They are a big name in finance, and they have, from the current stock price of $15.90, they suggest a 164% upside. That is obviously in the bullish direction. Sachs has a number 3 hold, D value, F growth, D momentum, so nothing really. So this leans basically bearish. Market cap 1 billion, no dividend, pretty high beta, approaching double the market. But that comes with the territory. This is a big mover. When this one goes on a rally like this right here, it all of a sudden produces north of 400%. When it has a bit of a correction, it can all of a sudden go down minus 55-ish%. So this is a big mover. I think that when we take all the evidence together, the seasonality, the chart, the fundamentals, especially the price targets, it looks bullish. It just does. But this is definitively a more risky trade. The bears are technically clearly still in control. But when we look at the previous times where lows were formed, we did have candlesticks that were a bit similar to what we have here. So if you zoom in a bit, so here we form a low, you can see that the wick goes further down and then we close a bit higher. So here we have a nice hammer. If we go here, you see that the wicks, look at the downside of the wicks here. So we close a bit higher. So there is this change here as well. But that only produced a little bit of a trade. We do have this wick situation here. It is not a hammer. So in this instance, you can see that the upper end of the wick here also shows that the bulls did try to go higher but closed lower. So this is sort of a bit of a standoff situation here between the bulls and the bears. So yeah, it is not given that this is the low, of course. It is just that we do have that very interesting, convergence here of signals. And the paradox of investing is that if you are sitting there waiting for, a bunch of corroborating data to come in, then you might also miss the move. Because let's say that you look at this chart and you say that, okay, you don't want to buy until we are above the 200 week moving average. The same logic could have you argue that we want to be above the 100 week and the 20 week to buy. And that same logic could say that, okay, I want to be above all the moving averages, so also the green 50 week moving average. So at that point, you could hypothetically miss out on an 84% move if the low is being formed. So yeah, that's just the paradox of investing. You want to buy the fair and sell the greed.